Have you wanted to move to Florida but can't find any deals? The real deals are ones that your realtor most likely is totally unaware of, and there are thousands of them in every county. In this video, we are going to focus primarily on Dade County and share what's going on there. Florida's housing market is currently in a state of flux. The interest rate on 30-year fixed-rate mortgages has seen a major rise, indicating a potential cooling down of the market. However, the state has also seen a steady increase in foreclosures over the past 2 years. In fact, Florida ranks 12th nationally for the highest number of foreclosures. Let's look at Dade County. It's a vibrant region with a bustling housing market with numbers here that are particularly interesting. As of recent counts, Dade County has 203 foreclosures, 4 HUD homes, 3 homes under the $100 down program, and 155 homes in the shadow inventory. But that's not all. Most interestingly, there are also 4,278 pre-foreclosures, 358 sheriff sales, 7,779 bankruptcies, and 5,798 tax liens. These figures hint at a complex, dynamic housing market with diverse opportunities for both buyers and sellers. But they also hint at a deeper issue: the increasing number of homeowners in financial distress. As we dive deeper into these numbers, we'll also uncover the differences between foreclosures and pre-foreclosures, and why the latter might be a better option for buyers. So, what exactly is a foreclosure? Well, let's begin by painting a picture. Imagine you've purchased a home, and to do so, you've taken out a mortgage. This is a loan from a bank or lender, which you've agreed to pay back over a certain period of time. But life happens, and for one reason or another, you find yourself unable to keep up with your mortgage payments. This is where foreclosure comes into play. When a homeowner defaults or fails to pay their mortgage, the lender has the right to take back the property. This process is known as foreclosure. But foreclosure is not an overnight process. It can take several months, sometimes even a year or more to complete. It begins with a missed payment. Usually, lenders provide a grace period of about 15 days. After that, a late fee is assessed. If you're able to make the payment plus the late fee within this grace period, you can avoid further action. However, if you continue to miss payments, the lender will send a demand letter or notice to pay, usually after 2 missed payments. This is a more serious notice, but even at this stage, most lenders would prefer to work out a payment plan rather than foreclose on the property. But let's say the missed payments continue. After 90 days to 120 days, the lender will begin the actual foreclosure process. They do this by filing a public notice with the county recorder's office. This notice is often called a notice of default or lis pendens. From this point onwards, the homeowner has a period known as pre-foreclosure, during which they can work out an arrangement with the lender, sell the property, or pay off the outstanding amount. If none of these actions are taken, the property goes to a foreclosure auction. If it doesn't sell there, the lending institution takes possession of the property, and it becomes what is known as a real estate owned property, or REO. Now that we've understood what a foreclosure is, let's look at what we mean by pre-foreclosure. Imagine a homeowner who's fallen beyond on their mortgage payments. They're in a precarious position, teetering on the edge of losing their home. This period is what we call pre-foreclosure. It starts when the lender files a public notice of default, and it ends when the property is sold at a foreclosure auction, or the homeowner manages to get back on track with their payments. So, why does this period matter? Well, it's a crucial window of opportunity, both for the homeowner and for potential buyers. For the homeowner, it's a chance to avoid the harsh impact of a foreclosure on their credit rating. They can use this time to either catch up on their payments or sell the property. Why would a buyer be interested in a pre-foreclosure? They're often listed below market value, as the homeowner may be motivated to sell quickly to avoid foreclosure, avoid the hassle of listing their property, and even saving money on realtor commissions. Additionally, for the buyer, it oftentimes avoids the flood of buyers coming in that could be competing with them. But it's not all smooth sailing. Buying a pre-foreclosure property can be a complex process, requiring patience, diligence, and a good understanding of the local real estate market. It's also worth noting that not all pre-foreclosures end up on the market. Some homeowners manage to catch up on their payments, or they may renegotiate their loan terms with their lender. In a place like Dade County, Florida, where the housing market has seen its share of ups and downs, understanding the nuances of pre-foreclosures can be a valuable tool in a buyer's arsenal. If you are looking for real estate and trying to get the best deal in a pre-foreclosure, it would be important to understand the true goals of the seller, whether they really want to sell or if they really want to simply stay in their home. Pre-foreclosures can be a better option for the buyer and seller if they work together and understand the desired outcomes for each side. Buyers also run the risk of sellers changing their mind about selling for a variety of reasons. They could come up with the delinquent payments needed to get them current and changing their desire to sell. That does not always happen, but it should be understood as a risk to buyers. While sellers do not want a foreclosure on their credit report, they also do not want to lose their home. If you are a buyer working with someone in the pre-foreclosure stage, it is important to be sensitive to what they may be going through. But in the case where they simply want to start over and capture as much equity as they can out of their home before losing it all, it could be a win-win for everyone. If you are buying a pre-foreclosure, you still clearly have the rights to inspections on the property, but the seller is most likely not going to do any repairs that you may request. In most scenarios, you will be buying the home as is, just like a foreclosure property. A pre-foreclosure property can present unique opportunities for savvy buyers, including lower prices, less competition, and the chance to deal directly with the homeowner. While all of that is very compelling, it remains important to realize what the seller could be going through and always remaining respectful to them. In some cases, you may be more comfortable hiring a real estate professional to help you through the process of buying a pre-foreclosure. You will still need to have clear title in the end, mortgage payoff, and be educated on the area, the association dues, if there are any, and other pertinent information regarding the property. Florida is just one of the states that is experiencing a deluge of pre-foreclosures and scheduled foreclosures. If you are looking in other counties or states, click the link below in the description to see what's available in your state. These lists are updated every 24 hours and you may just find your dream home there without hundreds of competitive offers in front of you.